Good morning. How we finance a build-to-rent development. It's how build-to-rent communities are transforming the Houston market, especially in fast-growing regions like Katy, Fulshire, and West Houston. With affordability challenges keeping many out of home ownership, BTR offers renters the feel of a single-family neighborhood while also giving developers and investors strong recurring cash flow. So recently, we helped finance a build to rent project designed to meet this exact demand. And the process revealed important strategies for both developers as well as investors. So, why build to rent is in demand? Well, big one is demographic shifts. Millennials and Gen Z renters want space, but many aren't ready to buy yet. Investor appeal. Build to rent assets provide stable occupancy and long term rent growth. Community living. These neighborhoods attract families seeking yards, garages, and amenities without mortgage commitments. So, how do we go about financing a build to rent development? Unlike traditional multifamily or single family subdivisions, financing a build to rent project requires some creative structuring. You're likely going to need a land acquisition loan if you don't own it already. And there's local banks that we can refer business to for purchasing land for a short term type deal before development. So then you get your plans, your permits, your drawings, and all that stuff together, and we get you a construction loan. And we work with a lender specializing in residential income communities. And the loan covered infrastructure, vertical construction, horizontal construction, and they just leased up the property from there. Next is we have to take out permanent takeout financing to find long-term stability. We have to meet a certain debt coverage. We need to have 90% occupancy for 90 days. So this layered approach ensured that the developer could break ground quickly while lining up refinancing options to reduce their risk. So here are the investor advantages. For commercial real estate investors, build to rent financing delivers a lot of benefits. First being predictable cash flow, similar to multifamily apartments, but with premium rents because they're single houses. Exit flexibility, option to sell as a full community or to parcel off as individual units as needed. There's high demand, so institutional funds are aggressively pursuing build to rent portfolios. And the lessons learned? Well, early lender conversations are critical, and many lenders are still learning the nuances of build to rent. Strong pro forma is a non negotiable. Investors and banks want detailed lease and upfront rent assumptions so that they can predict a model. And generally, if you put it on paper and make a plan, it's going to work. Exit strategies matter. So, whether buying, sold, or holding, we have to be clear on how we're going to get out of the project. The bottom line, build to rent is one of the fastest growing CRE trends in Texas. With the right financing strategy, developers can scale projects while investors tap into strong performing asset classes. If you're a developer, investor, or landowner considering build to rent, now's the time to explore financing solutions tailored to this emerging sector. That's all for today. Have a good one.